Hello and welcome to another trading week right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Well, it's interest rate setting season in some parts, and we unpack debt servicing in Africa and sustainability. Egypt's inflation continued to ease in early 2025, with both headline and core rates recording sharp declines. Plus, gold prices kick off this week up. And it's great to have you join us. I'm Ladi Williams, and talking about gold prices at this point. We're seeing spot gold 1.76% up starting this week. We know it was quite a tough week last week for the metals market. We saw drops right from Monday. Then we see U.S. gold futures 1.82% up $3,200. Following U.S. Treasury Scott Bassent's there reaffirming of President Donald Trump's tariff threats. That fueled that demand for the safe haven there. Investors feeling a little jittery. And if you look at other metals in the market, that's talking about silver and palladium and platinum. We see they're also up today with spot silver, a big 1.21% jump there. Platinum, 0.57%, trying to get back to that $1,000 psychological level. Palladium, $968, up 0.88%. So it's not looking bad right there in the metals market. But on the flip side, we're seeing oil, that's slipped today. Weighed down by Moody's downgrade of the U.S. sovereign credit rating, and the official data that showed slowing growth in China's industrial output and retail sales. And we're seeing investors reacting to that. Brent down 1.16%, following the drop we saw this morning, but much earlier was unchanged for oil, but we're seeing that drop start of the week. $61.78 a barrel, that's for WTI, down lesser there by 1.14%. So it's still about concerns over the outlook for the world's two biggest economies and oil consumers a week after Beijing and Washington's agreement to roll back most tariffs on each other's goods. And that we saw that push oil prices higher, but we're seeing a different scenario right there. To other matters now, President Bola Ahmed Tinubu has approved all necessary regulatory licenses for the Kolmani Integrated Development Projects to boost oil production between Bauchi and Gombe states during the groundbreaking of the Bauchi Oil and Gas Academy. Minister of State for Petroleum Resources, he highlighted the president's commitment to transforming Nigeria's energy sector for economic growth. The minister also stressed the importance of local capacity in managing and sustaining the industry, considering the country's vast fossil fuel reserves. He acknowledged the federal government's ongoing efforts to support technological innovation, human capital development, through the Petroleum Technology Development Fund, as a PTDF. And we see the Senate Committee on Powers raise concerns over the liquidity crisis bedeviling the power sector, lamenting that the tariff shortfalls in the industry have indicated that the government owes about 200 billion naira to electricity generating companies every month. The committee disclosed that since this year, the government has not paid the power producers, and that this has raised the debt to about 800 billion naira right there. All right, with Nigeria's official admission as a member of the European Bank for Reconstruction and Development, members of the private sector are looking forward to funding, which is expected to be available through the bank. Reacting to the fear of bureaucracy, Mr. Ayodeji Onigbogi is the managing director, Escrow Wealth Investment. He describes the process as easy and accessible. He was a guest earlier on Business Morning. Take a listen.
Well, for Nigerians, at least Nigerians in the private sector, it's a good development. They will access funds that are cheap, because our local funds are much more higher. We're doing about, even our MPR is doing 20-something%. But when you get access, when you're able to access foreign loans, you could get as low as 5-7%, single digits. And when you're looking at such loan, it will be long term. So it's a welcome development. But it will basically for people in sectors that are mineral resources, agriculture, infrastructure, and private financial institutions. Looking at for such body, European Bank for Reconstruction and Development, they will use access a long-term fund. When I say long-term fund, we are talking of 5-10-year funding that will be guaranteed by either a Nigerian bank using the sovereign, Nigerian sovereign, as the main trust. But what we should look at is for people that are seriously minded in the private sector is a welcome development. And I will expect everybody at this time to get their private consultant, people to talk to banks to see how they can access such funding.
All right, now to our first conversation. We see in recent years, African nations have faced growing economic pressures due to rising global interest rates and escalating debt burdens. And, we've seen some interest rates stay elevated. For the central banks now in particular, we see the U.S. Federal Reserve, they've kept, rates steady, but still elevated. Well, we see the European Central Bank and the Bank of England, they've reduced rates recently. Well, let's hear more now from Patrick Ba Abankwa, as a global investment consultant. Join me via Zoom from Ghana. Great to have you on the show.
Thank you very much, and good afternoon to you.
Fantastic. So, definitely, we've hearing a lot about debt issues now, even in the developed countries and advanced economies at this point. So it seems debt is not just for, Africa. That debt problem is not African alone, at this point. But how would you say, elevated global interest rates, how would you say they're affecting, African sovereign debt sustainability? And which countries do you think are most vulnerable in Africa right now?
Thank you very much. I think that the elevated global interest rates, as you rightly said, which are driven by tightening monetary policies in advanced countries, have significantly increased borrowing costs for a number of African countries. And I think this leads to some debt sustainability concerns. If you look at, for example, higher refinancing costs, countries that are rolling over their Euro bonds face steeper yields, especially if you look at Ghana's 2022 Euro bond yields, which spiked to over 20%. It also leads to some currency depreciation. So a stronger dollar increases the local currency debt burden. Example is, we all know of the Nigerian naira and the Kenyan shilling, which have faced some sharp declines over the period. And then if you look at reduced fiscal space, debt servicing crowds out some critical spending on health, education, and some infrastructure. If you look at the most vulnerable countries, I think that if you look at high debt to GDP ratios, countries that have been hit so hard, we have Ghana, we have Zambia, we have Ethiopia, they have suffered the most. If you look at low foreign reserves, then you are looking at countries like Malawi, Zimbabwe, and then if you are looking at countries that are having dependence on commodity export, then you can be looking at countries like Angola, DRC, due to their volatile revenues. I think that the Fed and the ECB rate hikes have made international capital more expensive, in my view. And I think that pushing some African sovereigns into debt distress. Zambia and Rwanda, Ghana have already defaulted, while Kenya now spends over 60% of their revenue on just debt servicing. I think that the worst hits are countries with weak foreign or forex buffers, and those that have maturing new Euro bonds like Ethiopia, which is, as we speak, they are seeking restructuring with the G20 common framework.
All right, so, definitely you did mention foreign reserves at this point, not, being able to, create that buffer, for most of these African currencies. But, in your view, which country in Africa would you say is, doing better, than most, when it comes to that foreign reserves?
I think if you are looking at countries that are doing better in Africa, you're also talking of countries like South Africa, which is still very strong when it comes to their reserve. Countries like Egypt. Egypt is still up there when you talk of countries that have been able to build their reserve because of how strong their economy is fundamentally, how they are able to institutionalize the use of their local currency. They don't rely so much on foreign currency for a number of these trade agreements. So these are countries that historically have shown that they are very strong. If you look at globally, of course, you are looking at the countries like China. China is still a very strong international horsepower when it comes to currency buffering. So On top of mind, these are the countries that I can see are doing the right things and have a strong foreign reserves to match up against any global shocks that will happen.
Right, and most of the time, you'll be looking at a country like, say, Egypt. I think that's about 40 to $45 billion. There we see Nigeria ranging between 33 to 35 billion dollars. So, looking at most of the top African economies at this point, what would you say would be that sweet spot, for foreign reserves? Should we be looking at maybe 60 billion, $100 billion?
I think that the quantum would depend on how big the economy is. You talked about Egyptian economy, you talked about Nigerian economy. These are big economies in Africa. You can't compare their buffer to countries like Ghana, countries like Rwanda, countries like Uganda, which in terms of the size of the economy is not as big as the Nigerian economy or the Egyptian economy. I think that what each country should do is to ensure that they have a buffer that is able to give them currency stability. If you have a buffer that gives you currency stability and you don't need to now be chasing after foreign currency for your trade in your country, then eventually you're able to strengthen your currency. As we speak, some countries have been able to rebound in terms of their currency appreciating against the dollar because of the global challenges that the dollar is facing. But other countries are still suffering as we speak. I know a country like Nigeria, you are still battling with depreciation of your currency against the dollar. So it's all about how big the economy is and the minimum that you need. I think that if your economy is very big, you should be looking around maybe 50, 60, 70 by way of your reserves to fight against any global shocks that may come your way.
All right, definitely. Most of these countries trying to beef up that reserve, going forward. But what would you say are the major obstacles in, debt restructuring negotiations between, African nations and some of their international creditors at this point? Would you say such negotiations are going well since this is a season, everybody is looking for some kind of deal or, negotiating on behalf of different countries at this point?
I think that the challenges that most African countries have experienced within this period, you can look at it in various ways. One, you're looking at the creditor coordination problems. Countries like China, which is now basically Africa's largest bilateral lender, prefers bilateral deals with sovereign states, while the private bondholders resist haircuts when it comes to some of this agreement. For lack of transparency is also, for me, one of the reasons why these challenges persist, because there's usually non-disclosure clauses in these Chinese loans which complicate fair burden sharing. Again, there's also divergent interests. Multilateral lenders like the IMF, World Bank, they like to prioritize austerity, whilst governments face political pressure to maintain their spending habits. So these are some of the challenges. Of course, you look at the legal hurdles. So if you look at the collective action clauses in Eurobonds, which sometimes make restructuring a bit lengthy. Pick a country like Zambia. Their 2020 debt default outlook, which was 3 years plus to resolve. It took a number of years for them to resolve that particular discussion. Ghana were lucky to go about a year and a half to resolve some of these legal battles. So I think that these, for me, are some of the challenges that goes with some of this burden sharing that goes on when it comes to restructuring of the loan agreements. Of course, we all know that the Paris Club sometimes step in to support some of these countries. G20's common framework also needs some reforms to enforce faster and fairer resolutions when it comes to some of these discussions.
All right, so definitely reliance has become a major issue with some countries relying heavily on just one export, commodity, or just over reliance on just one source for major things. How do you think African economies can reduce reliance on maybe foreign borrowing by maybe developing a deeper capital market? We know most proponents have said that the capital market can help when it comes to, funding choices there. What do you think?
I think that, first of all, yes, it's good that we look at other sources of reform. But I think that structurally, we need to reform how we build on some of these things. First of all, we need to be able to strengthen our pension and insurance sectors. Because in those foreign countries that we go for these loans, what saves and helps them to build funds to give out as loans is the pension sector. So I think that in Africa, we need to strengthen our pension and insurance sector so that we'll be able to mobilize long-term local currency funding. And for me, that is critical for us. Then again, we need to look at how we can improve our macroeconomic stability. High inflation continues to be a deterrent when it comes to institutional investors. So investors who want to go into investment look at the inflation that is quite high, and that informs them whether they can go ahead with their investment or not. So I think that that is also a critical factor. Then we should also work on enhancing liquidity. Some few African markets have active secondary bond trading, like South Africa and Kenya, as some exceptions to that. But historically, we have some countries having low access to the liquidity and active secondary market. So that's another area that I think they should be able to work on. Then there's also what we call the diaspora engagement. Here, you encourage citizens who are outside the diaspora to invest more in the country. Once they invest more, they bring foreign currency to strengthen the economy. And you look at a country like Ethiopia. Ethiopia's diaspora bond shows potential, but require trust building. So I think that all of these things can persist. Look at, for example, Rwanda's local bond issuers that they did recently. There was success for that. Yet, if you look at the broader progress, it needs central banks' independence and yield curve development to ensure that some of these things see the light of day over the period of time.
All right, and talking about diaspora remittances, we did see the lawmakers, in the U.S., mulling some kind of tax on, remittances leaving, the U.S. Definitely, that's. I know that still requires some, negotiations and all of that, but that would definitely be a big dent, to your plan there for diaspora remittances to help, in boosting most of these economies.
Sure, I agree with you, because the American market is basically looking at how they can strengthen their currency, create jobs for the people. So any money that moves out of the country, periodically they put in some impediment by way of taxes so that it accrues to their revenue base as a country. And I think that even if they decide to tax about 15%, 20%, they still have some funds coming to Africa to support our fragile economy.
All right, I guess we should be looking at Africa first at this point, so we can, boost the African continent when it comes to reducing debt levels, boosting some of our buffers, external buffers at this time. So much to unpack there, but tomorrow we'll be getting the interest rate decision in Nigeria. We'll cover that and see if it will be another hold or maybe something different, coming out from the MPC. Right here in Nigeria. Thank you so much, Patrick Bankwa, Global Investment Consultant, for sharing your thoughts with us today.
My pleasure, my pleasure.
All right, we'll take a break now. When we come back, we'll head straight to the markets with Will Ebong. That's in a moment. Just stay with us. All right, we're going to be heading to the markets definitely to find out what's happening at intraday on the African continent, especially with the NGX and also global markets as a brace for a new trading week. Would there be volatility this week? I guess there's no week without volatility at this point. Let's bring in Willie Bong now to bring us up speed. Good to have you, Will.
Hey, lad, it's good to be
on this side.
On this side of town. But basically, yeah, volatility was natural in the market. You can't expect markets to roll just smoothly without, having that.
No volatility. Yeah, everybody's just calm.
Everybody's moving on, easy street. No, it's not like that.
Market moving, headlines, tariffs.
So we definitely have to have those, triggers in the market that will definitely take the market up or down, and we'll definitely see how the market will roll out this week. Last week was a bit bullish for the equities market. We saw that, green, and then we see it also closing at an
new highs.
New highs, and we're seeing another one at intraday. So let's see if investors will take this as a key to start taking
because we're getting decision day tomorrow.
Of course.
From the MPC. Consensus, another hold.
Another hold. That's what market participants
Nothing
are hoping for.
There.
But we'll see what's position the MPC is going to take, because, you can't decide.
Yeah, and forward guidance.
Yeah,
very
definitely,
important.
very important. So let's see how major markets, equities in Africa performed at intraday. We saw they were mostly negative at intraday, except for Nigeria's NGX, which was up at intraday by 0.17%, sustaining bullish trends from last week and hitting a new all-time high at 109,894 points, hitting that 800 points we've not hit before. The last time was about 300, not 109, 300, but right now we're at 109,800, which is very good. And we also saw mixed performance across sectors. I saw a drop in the banking index. Insurance was also in the red zone. Oil and gas was trading flat at intraday. But let's look at South Africa's GSE. It was also down. It was down at intraday, not also down, because the NGX is up 0.83%. Elsewhere, let's look at Egypt's EGX, which was also trading down 1.21% at intraday. But Nairobi Stock Exchange closed Friday's session in the green, 0.68%. That stock exchange has been doing so well lately. We'll definitely get an insight into the market maybe later this week. But let's talk about other markets now in Nigeria. Fixed income market, to be precise, the market started the week with a bit of subdued tone across both the treasury bills and bond segments. We know that the Central Bank's Monetary Policy Committee in Nigeria, MPC, is scheduled for today, starting today, tomorrow. We'll wait for the decision. Market participants seem to adopt a cautious stand ahead of the MPC. But Chuka Nwachukwu, Chief Dealer, Group Head Trading at UBA, joins us. Chuka, the outcome of the meeting is anticipated to offer further clarity on future trajectory of interest rates. However, the consensus, we talked about with Ladi, is the expectation among market players is that the MPC will maintain the current rate at 27.5. Do you share this expectation?
Yeah, good afternoon, Will. Thank you for having me. Of course, I did share the same expectation. I said that to Ladi when we had the conversation last week, that all expectation is that MPC will hold all parameters. Now, the reason being that the inflationary concern as regard the trade war is gradually easing. We saw the last inflation figure, drop by about 50 basis points, dropped to 23.71. And so that's obviously an indication that the pressure, inflationary pressure, has continued to ease. And then, of course, that also detailed on the CBN governor's pronouncement, or his stance so far, that he's about price stability and reducing the inflation as much as he can. So with this, we expect that the inflation figure will affect the outcome of the MPC, and I think that they will maintain all parameters. Maybe towards the end of the year, or maybe third quarter, we'll probably see decrease in the rates. But for this one, I think that the only expectation is that the inflation figure, the rate we hold, and we're looking forward to it.
Definitely, inflation has been trending lower, so everyone expects the CBN MPC to also hold. But we know that in the last MPC, there was a hold position. You mentioned that all parameters unchanged. However, we saw the CBN hike the rates, especially when it came to OMO auctions, treasury bills, just to attract, I think foreign money. That's the hot money. Do you see yields in the fixed income space, the fixed income market, trending higher, regardless of the outcome of the MPC meeting tomorrow?
Yeah, I think that on the OMO side, we see slight increase in the rate. Last week we saw OMO printed around 22 levels. We still see that as long as the government is looking to attract some of these hot money, as we call them, we continue to see that the rate will be favorable, for them to come in. And so we see OMO, around 22 level, 23, you might even get to 23, over 23 levels, just to attract, some of this hot money. On the T-bill side, on the NTB side, NTB is obviously more of DMO, and then DMO is wary of costs in terms of debt service. And so we see NTB within these 19 levels. I don't think that we see NTB, at least for the next 6 months, go as high as 23 levels. But I think it's going to be within 19 levels. 1 year is currently printing around the 19 levels. And then, of course, there's an auction next week. On Wednesday, we still see that it will be within that 19 level. So I think OMO will slightly.
I think we've lost Chuka. Can you hear me? I think we've lost Chuka there. Okay, I think we lost Chuka for a bit there. So let's just moving on. When getting back, we'll probably get the trades investors are looking at the moment. But let's look at the Abu Dhabi Middle East markets now. Gulf stocks were trading mostly positive after we saw weakened oil prices, mixed economic data from China, and the downgrade by Moody's of the U.S. credit rating. Now, Dubai was trading up 0.66%. We see Abu Dhabi also in the green, 0.1%. Still within the region, we see Saudi trading in the red, 0.46%, and the Qatari index was trading up 0.65%. Let's scoot over to the U.S. now. Stock futures stumbled early on Monday as the downgrade of the U.S. credit rating by Moody's caused Treasury yields to spike. Futures tied to the Dow Jones fell 0.7%. We saw the S&P futures pulling back 1.1%, while the Nasdaq 100 futures lost about 1.5%. Now, Moody's on Friday, after the bell, bumped the country's rating down by 1 notch to AA1 from AAA, bringing the agency in line with other agencies' credit ratings, which have downgraded the U.S. already. Now, the firm cited financing challenges tied to the federal government's growing budget deficit and the ramifications of rolling over existing U.S. debts in a period of high borrowing costs. Now, the debt downgrade pressured bond prices, sending yields higher at a time when the economy is already under pressure from President Donald Trump's unfolding tariff policy. The downgrade also comes after a winning week on Wall Street as investors cheered the White House deal with China to temporarily slash levies. Now, traders now see more trade deals as key to keeping the stock markets come back going, if they need to go back. Now, if yields don't scare away investors first. Now, let's look at Asia now, see the markets performed. We see the markets falling on Monday as investors assess the latest slate of economic data from China and, of course, Moody's downgrade of the U.S. credit rating. Japan's benchmark Nikkei 225 dropped 0.68%. to close at 37,000 points. I'll see South Korea's Kospi declining 0.8% to close at 2,600 points. And the small cap Kosdaq traded 1.56% lower. Hong Kong's Hang Seng Index, let's look at that. It declined 0.05%. We have that on the screen. And while the mainland Shanghai, we see it trading flat, to close the business for the day. Now, China's retail sales growth slowed in April, signaling that consumption remains a worry for the world's second largest economy. Retail sales rose 5.1% from a year earlier in April, missing analysts' expectations of 5.5% growth. Industrial output grew 6.1% year-on-year in April, stronger than analysts' expectations for a 5.5% rise, while also slowing growth, from 7.7% jump in March, indicating that the impact of U.S. tariffs was not as harsh as was being expected. Now, the Nifty 50 in India was also in the red at the close of business. So looking at all that is happening in Asia, we see that lower close in the red. We see U.S. markets also dropping in the red, especially with what's happening in the markets now, the jitters about the downgrade. It's really impacting markets. Ladi, you can tell that the sentiments that market watchers have when it has to do with the U.S. is really strong. As in, just look at that downgrade. From Friday, we see Asia markets already reacting. Even markets in the Middle East also reacting to that. But we saw a bit of recovery for Middle East markets after they traded in the red earlier today. What we saw at intraday, they were recovering from that, And
all of this on the back of, the president's tour, in
the Middle East,
and getting all of those juicy deals.
He did get those juicy
for some
deals.
businesses in the U.S. Quite interesting. He's turned into from the tariff man to the salesman.
Of course. He's a businessman at heart. For the first and foremost, he's a businessman before he became the president. And we see him, striking those deals, closing those business deals that people normally would, other presidents probably would not have closed in a short period of time that he's been there. And, it's actually it's a plus for his government.
A lot of big companies right there in the U.S. and we'll see that also impact, their share prices. Really good.
But what do you think about Nigeria's CBN MPC tomorrow?
Oh, yes.
It's a big one. You're
going
to be on tomorrow.
Yeah,
what are your expectations for this
live,
CBN?
And definitely we know it's the same issues, before this MPC, currency, definitely inflation.
We see it weekly now. The Naira is really trending lower now against the dollar. So is that going to impact the CBN's
and the inflation
decision?
number was also good.
Inflation number was down, yes, but the real thing is that we really feel the impact when we go to the market.
Yeah, when you go to the market.
It's just on paper. We just get the theory, but when we go to the market, we actually see that price drop in commodities.
I'm still always haggling, with those market sellers there trying to get me a good deal. But so we're not feeling it.
We're not feeling it yet. So we're hoping that maybe towards the second half of the year would get a real...
Is it enough to make that cut decision? Maybe.
Maybe it's too early yet.
Or too early. Let's give them time.
Okay.
We'll definitely find out tomorrow. Thank you so much, Will, therefore bringing us all what's playing out in most of those markets that we track right there. And speaking about the markets now, let's look at what the markets are doing in Europe. We have Lars Holter with DW. He'll join us very soon for that to tell us what's playing out in most of those markets that we track right there in Europe. But let's all right, let's see. Let's try and get Lars now. Lars, how's it looking there? Okay, we'll try and get Lars. Let's get a check on what's playing out with other economies. Now, we see inflation in Egypt showed a nice decline in early 2025 with both falling sharply, and that's according to the Central Bank of Egypt's monetary policy report for the first quarter. That was released today. Annual urban headline inflation fell to 16.5% in Q1 2025, down from 25.4% in the previous quarter and 33.0% during the same period in 2024. Core inflation also declined, reaching 13.6% compared to 23.8% in the fourth quarter of 2024 and 32.7% in the first quarter of 2024. The central bank in Egypt attributed the previous surge in inflation to a combination of international and domestic pressures. Key factors included global commodity price volatility stemming from the Russia-Ukraine conflict and heightened regional geopolitical tensions, and the impact of domestic economic reforms, which fueled inflationary expectations right there in Egypt. But that's a good number right there for the first quarter of 2025. In Ghana, I will see the Treasury bill auction as for May 16th. I will see the government accepted bids totaling 2.76 billion Ghana cedis, significantly below the 6.68 billion Ghana cedi target. It rejected about 2.6 billion Ghana cedis in bids, signaling a continued preference for keeping borrowing costs low rather than meeting the funding goals of higher interest rates. I also see that yields on the 91-day, 182-day, and 364-day bills were largely unchanged at 15.11%, 15.68%, and 16.79% respectively, and now slightly down from the 15.16%, 15.70%, and 16.80% in the previous auction. The government is aiming to raise about 5.55 billion Ghana cedis in its next Treasury bill sale scheduled for Friday. All right, let's get a check on other matters now. As the world gets more interconnected, at this time, we can't have a conversation without artificial intelligence. At this point, we see cybersecurity has emerged as a huge factor right now, and critical concerns, increasing sophistication of cyber threats, integration of most of artificial intelligence into most things at this point. Now we hear that you have AI agents that can actually shop for you when you're looking at most of these e-commerce platforms. Well, joining us now, we have Kazim Adamson. Kazim Adamson is joining us via Zoom. Great to have you on the show, Kazim.
Hi, thank you very much for inviting me on the show.
All right, so definitely we can't have any conversation right now without AI, but talk to me about how AI, how's that shaping, or what's the state of AI and cybersecurity right now in Nigeria?
So currently, Nigeria's cybersecurity landscape is evolving rapidly, also are the threats. So as we as a country is embracing digital transformation, like the rest of the world, our exposure to potential cyber attack points is also expanding. So I'll give some references here. So recently in December 2024, if you recall, the Nigerian National Bureau of Statistics suffered a major breach that took its website down for like 29 days due to some internal security lapses. Also in the financial sectors, in 2023, Zenith Bank fell victim to a targeted phishing attack and causing significant losses to the bank. Also, more recently, there was an attempted compromise of GTBank website domain. In response to these cybersecurity trends and events, the Nigerian government is pushing regulatory reforms while the private sector is also investing in stronger cybersecurity defense. So I feel a public-private partnership is emerging as a key of tackling these growing cybersecurity risks in Nigeria.
Some of the primary applications of artificial intelligence in cybersecurity today. I know there's a lot of conversation now about AI agents. At this point, I'm wondering if they're also playing a role in cybersecurity.
Yeah, very much. So in today's world now, so AI is now an integral part of modern cybersecurity. Globally, organizations are now leveraging AI to scan massive amount of data like network traffic and login activity. So in the older days, like when I started my technical my IT or cybersecurity career, then we have to manually go through the logs one by one, and go through a massive amount of logs. And in most times, these logs might take you days or weeks or before you spot an activity. But in today's world now, so AI agents and machine learning have been leveraged to like scan these logs in real time, and they can detect unusual behavior. For example, now let me give you a reference now. If as a channel staff and you're expected to log into your PC between 8 a.m. to 5 p.m. and you're expected to log in from Nigeria, AI can detect like, oh, someone is trying to log into your account from, let's say, Canada, and is logging in at 1 a.m. So AI can find this unusual behavior and flag it as early as possible before it leads to a major outage. And AI can also be leveraged to provide the smarter response. Let's say there's an activity, let's say your device, now your PC is compromised and the device posture changes. AI can be leveraged to make faster and informed decision of, let's say, block or isolate this compromised PC from accessing your internal network before it leads to any kind of compromise. AI can also be leveraged to make smarter and faster response, and in this way, resolutions are made faster. Also, with AI now, with experts or cybersecurity professionals can now focus on more important things like giving an example of days of where cybersecurity professionals are required to go through logs to find unusual patterns or events. AI can now be leveraged to go through the logs, while cybersecurity professionals can now focus on more important things. In short, AI helps cybersecurity teams and professionals respond faster, work smarter, and prepare attacks before they even happen.
Right. I guess, if the attack even comes when I'm sleeping, I guess AI can help with that. It would know a way. But how would you say AI has impacted cybersecurity in Nigeria? What opportunities or risk has it introduced so far?
In Nigeria, as every other part of the world, AIs have introduced both new threats and new opportunity. In the threat landscape, cyber criminals are now using AI to make scams more convincing. I heard some Nigerians have reported issues of fake videos or phone calls, which we call deepfake calls, where a scammer can mimic you or your family member or a friend. Like a scammer can mimic me, like present a video of me making a phone call to my family and requesting for funds. So AI can now also be used AI can now be leveraged to make these deep fake calls and mimic calls, and also leverage or attack us. Also, some others have initially during the early days of our cybersecurity awareness training, we actually told that a fake email or a compromising email usually comes like the wordings are usually not correctly spelled or they are not formatted properly. But with these days of AI can now be used to create perfect phishing emails that look very authentic. So AI can also be leveraged to create these perfect phishing emails, and it will be very hard in today's world to differentiate between a fake email or an authentic a fake email or a mail that is meant to scam you or fish you or phishing attack to an authentic email. While on the flip side, AI also comes with opportunity. As I said earlier, AI is also being leveraged to fight the cyber criminals. Banks and fintech also in Nigeria also using this AI to spot unusual transactions and stop fraud in real time. So banks also use AI to like scan their transaction logs and see that, oh, this transaction looks suspicious, and they can use AI to flag and stop the transaction in real time. Local organizations like T-Knowledge are also building smart security systems that monitor network 24/7 and predict threat before they even happens. The Nigerian government too have also launched a national AI strategy to explore how AI can protect critical systems like electricity and healthcare system. So overall, AI in Nigeria's cyber landscape is double-edged. It empowers the cybersecurity professionals and the vendors with better tools for real-time monitoring and predictive risk scoring, but it also requires Nigeria to fill this keep gap and adapt to regulation and adapt to this AI regulation.
Right, and definitely as cybersecurity gets stronger, I'm sure the cyber attackers too will be finding ways to go around most of this security. But how is AI currently enhancing cybersecurity? When you look at it on a global scale.
So as I mentioned earlier, so AI is being used to to counter the cybersecurity risks. I'll give an example during this current Ukraine-Russia war. So Ukraine cybersecurity team credited AI-enabled cloud service with rapidly detecting and responding to waves of cyber attacks on their government infrastructure. Another example is in the intelligence and defense circles. AI are also now used to like scan dark web chats and chat rooms and engines, and to pinpoint attacks and map them to attack patterns. So AI is being used around the world for smart intelligent for intelligent data protection. The same AI that fuels automated attack is also being turned into a defender tool in this current world. So as I said, AI is being used not only in Nigeria, all around the world to protect critical infrastructures.
All right, definitely. I hope maybe AI at some point can help me make some money, maybe through most of these markets. But we'll see how much AI grows, going forward. Thank you so much. That was Mutiu Adamson Kazim, an AI intelligence expert right there. Thank you so much for coming on today.
Thank you very much for having me. Bye.
Yeah, so from artificial intelligence, we see it in every sector, at this point, impacting almost everything from AI agents from shopping. We're also seeing, hearing talks about, trading that maybe artificial intelligence can spot, by looking at some of the technical analysis and tell you if a trade is going to go up or go down. So much, I guess, to use AI for. But let's circle back now to Europe. I did mention Lars is going to join us to tell us what's playing out in most of those markets. Hello, Lars. Great to have you.
Hello, Lottie. How you doing?
I'm doing great. How are the markets looking? Starting off a new week.
Yes, it's interesting how this week starts with actually, unfortunately, not much going on if you're just looking at the indices. Over in London, we're seeing the FTSE 100 down about 1/3%. The CAC 40 in Paris is down about 2/3%. And then last time I checked the DAX over in Frankfurt, Ladi, I'm telling you, it is exactly flat. So right now in this Monday trading session, there is really not much going on. However, Ladi, when I say the DAX is flat, it is actually close to its all-time high, and that is saying something about investors' confidence, because a DAX that high, and other indices too for that matter, it's crazy in the kind of times that we're living in. Now, talking to analysts, we're hearing that, of course, people are still worried about trade. Look, there have been some talks between the US and China, and tariffs are lower now, but they are still historically high. And in the US, big retail chains like Walmart are warning of rising prices. Also, Moody's over the weekend just lowered the US credit rating. All that is seriously bad news. Looking at German or European shares, there's not much individual action today. Now, let's see what the week will bring, and we'll await any news from a pretty high perch.
All right, we'll definitely be looking out for all of that. But meanwhile, a new German government is taking over, in Berlin, and one of its highest priorities is, fixing the country's struggling economy. What are you hearing about the first steps so far?
Yeah, that's right, Ladi. Definitely the economy here, #1 topic right now. And we've heard a first major policy speech by our new economic minister, Katharina Reiche. She is one of Chancellor Merz's most interesting cabinet picks, because unlike what we had seen for decades, really, she wasn't picked out of the usual suspects, the political field, the tried and trusted party soldiers that in the past were often given important positions within the government as a reward, so to speak, for years-long service to the party. Katharina Reiche now has been in politics before as well, but her last job was as CEO of a major energy company. So she has been, in fact, picked out of the corporate world. And she's just given this first major speech, and she made it very clear that she's in a hurry. She says very clearly that she's worried about Germany, that, quote, "It seems like Germany forgot how to grow." Well, Ladi, the German economy has shrunk for 2 years, and it is expected to stagnate this year. Reiche says much of this is, of course, due to outside factors like the war in Ukraine and high energy prices, but not all, and that it is high time to tackle the most pressing issues that hold back the economy from within the country.
And what would be the most pressing issues now? What is the secretary expected to do?
Well, Ladi, she says that previous governments have simply failed to spur investment in corporate Germany, and that is where she wants to start. Now, where do you land in this very well-known debate? With taxes, of course. Reiche wants to see much lower corporate taxes, and she wants to see them lowered now from 15 to 10%. But that will be really hard to do. Chancellor Merz and his CDU party, which nominated Reiche, is in a coalition with the center-left Social Democrats, and the two parties have agreed in coalition talks that corporate taxes should indeed be lowered, but only starting in 2028 and only by 1 percentage point per year. And until then, the government wants to help companies and spur investment with special write-off rules and by reining in bureaucracy. But Reiche says that is simply not enough. She wants lower taxes now, but of course, it is unclear how she will get to that point, how she will deliver if, of course, such policy has to basically be agreed upon by the coalition partner.
All right, thank you so much, Lars. So much to unpack, and definitely you bring us up to speed, going on through the week on what's driving sentiment right there in Europe. Thank you so much, Lars Holter.
Yeah, thank you, Ladi. Good talking to you.
Fantastic. All right, let's get a check on what's playing out with other markets now. Let's see if it's red or green on the screen for the crypto market, and it's red. Just like that, $102,000 start the week, 1.7% down for Bitcoin. Ethereum, also a big drop there, 4.49%. XRP also down. So we're seeing blood on the streets starting off this Monday. And remember there was a time when everyone was just tapping on their phones, trying to get rewards from, most of these tap to earn platforms. Some promised so much and delivered so little. Some did really well with their promise. But let's look at how some of these coins are doing, post all the tappings and all of that. Let's start off with Notcoin. After it was listed on the exchange, was trading at about 0.002 dollars. No, right now it's trading at this price. Right now it's much higher than that when it listed, about 2 cents. And it's down 74% from the last high when it started trading on exchanges. Then we see the hamster combat. I know there were a lot of complaints about the compensation most people got. That's down 73% from the first trade on major exchanges. It's trading at 0.002 cents. Also, then we see Catizen. That's trading at 9 cents. Now, it's down a big 92.29%. So whoever bought at the high, which was, I think, over $1, I think about $2 or so, they're down about 92% from buying that. And maybe if you were compensated, maybe you sold immediately or you held. Depends on what you did with that. But let's bring in Adeni now, Oluokporo, who is a crypto evangelist. Hello, Adeni.
Thank you for having me. I'm fine.
Yeah, it's great to have you. And I don't know if you were tapping like most people were at some time in 2024, maybe 2023. But we're looking at some of these listed projects now. They're not looking so good, from the previous high, down 90%, 70%. How are you seeing that?
I think it's not really surprising. One of the things that we have to know is that most of all these projects have a lot of flaws. If you notice during that time, most of all these Telegram projects were basically hype over fundamentals. There was a lot of hype with the way people were talking about the growth of these projects. Another thing too is that is very important when it comes to having this kind of project is they did not really have plans to have their player retention. Like if you think of popular games like GTA, you see that there are a lot of ways in which they retain their players using the GTA Online and bringing different innovations. But these Telegram games were just more or less about bringing people together, creating hype, having huge numbers in their Telegram groups. But eventually, when the tokens launched, many people just dumped the airdrop and there's nothing to keep them, which is the most important thing.
Looking at these prices now, we've seen some of them, try to recover, this year. We've seen the likes of, I think, dogs. That's a few months now. It's tried to, add up, in price, but still far from, the previous high. Do you think, most of these projects will ever get back to those highs they traded at the first time on the exchanges?
It actually depends because, at the end of the day, having fundamentals is one thing and also having that potential to spike. For example, a coin like, or a project like Dogs, as you said, if they're able to have partnerships with different projects, because at the end of the day, these Telegram games are as big as the integrations that they have. So let's say a game is able to be integrated into different platforms. Let's assume you're able to play it on PlayStation, you're able to play it on your phones, maybe they're on Apple, App Store, Play Store. That could actually make those games get traction and bring the kind of fundamentals or the type of features that can enable them to come back. Because at the end of the day, these Telegram games or their developers have to find a way in which users can contribute one way or the other, either in terms of clicking ads, making the games what we call freemium, where it's free to play, but it comes with ads or limitations, or they can introduce things where you have to spend real money to purchase to ensure that it has like potential similar to like a Web2 game like Candy Crush. Yeah.
Right. So at this point, is it over for new sets of play to earn games on Telegram, or has that season ended? Finally.
When it comes to the crypto space, there's really, it goes beyond belief. Like if somebody told me 4 years ago that meme coins would be very, very huge as it is now, I would have said it's a lie. But if you look at the Solana ecosystem, Form.Fund is single-handedly contributing close to 50% of the transaction fees generated on Solana, which is crazy when you think of it. When you think that Solana was built as a platform to make transactions faster and not for memes. So when it comes to these play-to-earn games, these Telegram tab games, obviously out of the 100 or 200 of them that were launched, we are going to see 95 to 98% of them crashing, but we are going to definitely have 2 or 3 of them that gets the fundamentals right and get the kind of adoption that they need to survive long term.
Thank you so much, Denny Olokwaroku, there for bringing us up to speed on what's happening with most of these tap games. Thank you so much.
Thank you for having me, as always.
All right, so that's the markets today. That's how most of the markets we track are looking. Not too much action, yeah, but there's a lot of information coming out this week that would drive sentiment. For one, Nigeria getting that decision tomorrow, how much or how expensive borrowing costs might get or maybe stay the same going forward. Thank you so much for watching today. We'll cover that tomorrow. I'm Ladi Williams from here, the team right here at Channels HQ. It's bye for now.